12.7 and 14.3 and 14.9. What I will do is go over the requirements of 12.7, 13.1, and some part of 13.7. So here is the question 12.7. And my understanding is, after I've got a couple of emails from two students, and my understanding was that this is a little bit more complex than what I had interpreted or what I had thought of initially. So let me just go over the requirements of this question. Before I begin, let me confirm you all can hear me. So if you could just type it in the chat area, you can all hear me. Okay. Okay, perfect. Thanks for confirming that, Carmel. So here's the question, and then we move over and discuss the requirements of this question. And this question can be interpreted a few different ways. So I just want to make sure that we are all on the same page when we are working on this question. Let me know when you finish reading it. Very good, very good. Okay. So what we require to do for this question is determine Stephanie's taxable income and any losses that may be carried forward. Two things to take into account is that first, she derives income from a business, and second, she derives income from a partnership. So she has two different income streams from two different businesses. We have to apply certain rules from chapter 12 that we learned about tax losses. So make sure you are applying those rules. For example, any restrictions on tax losses, any restrictions on superannuation, like the limit on deduction for gifts and super contributions, and also any past year losses, which ones you can and you cannot. So what those past year losses that you can apply. Now, to address this question, first thing, and I will show you the next slide. This is what your spreadsheet looks like. So you're required to calculate the assessable income first of all. So if I go back to the question, notice you have been given the assessable income for the year 2015-16, 16-17, and 17-18. So 3 different years. And your spreadsheet also suggests that you have to work for 3 different years. So 2015-16, and then on the right-hand side of the spreadsheet, you're required to calculate any losses. So the losses that you can carry forward. So if I go back to the question, you have been given the assessable income here, and you have also been given the deductions and the losses from the partnership side of the business. Then you have been given the super and gift and net exempt income. To calculate the assessable income, take the business assessable income, and then take away any deductions that are given to you in this section. So you have been given a couple of deductions, and you can also take the losses as a deduction in this instance. Now, calculate what your taxable income is. Remember, if your losses or deductions are more than your assessable income, then your taxable income is 0. It is not negative, it is to be 0. So everyone's clear up till here? Any questions? Okay, no, not clear. All right. What is the assessable income for the first year? 2015-16. Just type it in the chat area for me, please. Very good. And how much are the deductions? Total the deductions and tell me how much are the deductions, please, for 2015-16. You all are giving different figures. You all are giving me different figures. And this is where you need to look into. Okay. Uh, so 80,000 is the general business deduction. I'll wait for whatever you're typing up. Yeah, it says general business deduction. So you've already been given deductions $80,000 for 2015-16. So that is correct. 80,000 is correct. Anything else that you can take in deductions besides that $80,000? No one is correct, Jason. That's why I'm that's why I was laughing. Um, I will suggest having a look at super and gifts deduction on what you can take. So have a look in your week 6 limit on deductions for gifts and super contributions section. In this case, you won't be able to take this one. Any other thing? Any other thing that you can take as a deduction? Have a careful look. She has income from 2 different businesses, right? 2 different businesses. Is she making any income from the second business? Aha, that's it. I mean, that's it. 21,800. So there's a loss there. That's exactly right. You should be able to take a loss as a deduction. That will reduce your income. Okay. So add your deductions and then see, are your deductions or losses deductions higher than the income? If your deductions are higher than the income, then you report no taxable income. No taxable income in that instance. Now, does it make sense? I am is clear. What about you, Carmel and Jason? I'm just waiting for them to finish typing before I move on. Okay. Jason, you're saying the income had to be higher to become business and add together. And what's the limit on that one? What's the limit on that one? That's all right. I think it was about $20,000. In this instance, right? In this instance, have a read in this. General business deductions are separate from personal super contribution, gifts, partnership losses, and losses of previous year. So first thing is they are separating it from the general business deduction. So they're not taking it into account. Plus, they're considering a partnership income. Now, I am taking it this way, that this Stephanie is working on one ABN, one ABN. So if I collect her income, right, it's more than $20,000. Her collective income under one ABN is above $20,000. Hence, a loss from the other partnership income could be accounted here as a deduction. If the question provided you two different ABNs, or say company and some other thing, then you may not be able to take that as a deduction. In this instance, I will say you should be able to take that deduction. Does it make sense? Okay. Now coming to Carmel. Carmel is at a loss with super and self-testing of 7,000. What's that? 7,000 about super. Um, super. What's the confusion there about super? Let me just go back into the. I'll just show you something. I'll type this thing in the chat area. Have a look. Have a look. What I have copied and pasted in the chat area is a limit on deduction for gifts and super contribution. So have a read on this one, Carmel. Because if we look here, when you will put this information in the spreadsheet, you will notice they are already making a loss. That's right. So they will not be able to add that super and gift into their deductions for this year, for 2015-16. Make sense? Okay. All right. All right. Perfect. Now, on this spreadsheet, besides working out the assessable income and taxable income here, you also have to work out the calculation of carry forward losses. You know what the deductions are, which you would have calculated on left-hand side of the spreadsheet. So you will write that deduction here and then minus any other exempt income or assessable income from that one. And that should give you a carry forward loss. So let's go back to the question. So what was the deduction? Oh, I'll just hold on for a minute. Okay, can you hear me now? Just please confirm if you can hear me. Okay, thanks for confirming that. All right, so in the first year, how much was the total of deductions? Write down that total of deductions that you calculated on the left-hand side of the spreadsheet, right? Oops, sorry, that's the wrong spreadsheet, yeah. So whatever deductions, total deductions you calculated here, use them deductions on this side, right? That same figure, and then minus any other assessable income and exempt income. So in this case, what is the assessable income? What is the assessable income? And you have been given, very good, that's right. And what will be the exempt income in this case? Very good, that's it. Add them up and minus them from the total of deductions, and that should give you any tax losses that you can carry forward. That's correct, Kamal. Okay, second part of the question. Now, in this one, remember there is no loss. There's actually a profit from partnership income. Now, Ayami said she missed it. Okay, I'll go again, Ayami. What I was saying was, write down the total deductions that you calculated in this side of the spreadsheet, right, for 2015-16. So write down the total deductions and then write down the assessable income and other exempt income, right? Exempt income. So total, your assessable income and exempt income, minus that from the deductions, and you will have your answer. I had a look at your spreadsheet. You had the correct answer there, though, so do not worry about it. Okay, next one is 2016-17, right? 2016-17. Now, what is the assessable income? You have been given the business income. You have been given the net income in this instance instead of losses. So you have net income. And you have been given the business deductions. That's correct, Kamal. You have been given the business general deductions. So minus that from the total of the business income. And in this instance, apply that super deduction limit thing that I mentioned before, right? In this case, you will be able to apply the superannuation and gifts because you're making income, not losses. And then you will need to account for losses recouped in this instance, right? How you will calculate those losses recouped? Go on to the other side of the spreadsheet on this side. You already have some tax losses that you can bring forward from the previous year. So there's some amount that you have been provided there. Take that amount and then minus any exempt income. Jason, would you like to comment on how you're going to calculate the losses recouped? Just waiting. Yep. I think you did. I think you did in your spreadsheet. I'll double check. Just hang on a minute. Just asking you to wait for a second. Sorry for the delay. I'm just looking into something. Yep. Okay. What I was looking into, the workings you have done, Jason, in your um, draft, right? I was looking into that for 2016-17, and you have calculated those losses correctly for the year 2016-17 when you were calculating the tax losses. So you had calculated those losses recouped. And that is what I was asking the question about. So I'll repeat my question. How did you arrive at the losses recouped? And there's an example. That's all right. Have a look in cell E20 of your worksheet. Now, for others, because I cannot give you the answer to this one, I'll suggest working your way through the self-testing activity on pages 405 and 406 of your textbook. And there's an example there how you arrive at calculating the losses recouped. Self-testing activity, and here is what I've suggested this in this spreadsheet. This one, self-testing exercise 1 on page 406 and 407, I think 406. 407, sorry. Yep. And you have been given an example how to calculate those losses recouped. Because you're making, because you are able to, you're making income this year, so your assessable income is higher than the deductions. The difference, you will be able to take that as a losses recouped. I'll say that again. Because in 2016-17 year, when you will take the assessable income from the business assessable income and the share of partnership net income, when you add these two figures, you will see these two are higher than the general business deduction and other deduction that you can take you can take away in this second year 2016-17. So whatever is the difference you will be able to calculate, that will be your losses recouped. I'm waiting for Kamal to finish typing. There you go, Kamal. That's correct. That's correct. You interpreted it correctly. That's correct. So now use those losses that you have recouped in this side of the spreadsheet, right-hand side of the spreadsheet. So you already have the tax losses that you're bringing forward from the previous year. You have the exempt income, and then you minus those losses recouped, and then you will be left over with the tax losses carry forward. Same thing, same concept. Now apply this to the third year, 2017-18. Same concept, right? And I'll leave it there for the third year. Everyone's okay? Yes, it is still recording, Jason. Yes. Kamal, is there any confusion? So apply the same concepts that we talked about for 2015-16 and 2016-17 years to the third financial year, 2017-18. And you should be fine. You can grab the microphone, Kamal, if that's easier. That's all right. So Kamal has asked a question. Can you advise if we take deductions general business for the 2017-18 financial year? Is that what your question is, Kamal, about? For 16-17, not 17-18. Yes, you will be taking those deductions. Absolutely. For all the years, you will be taking the deductions for all the 3 years. Yes. Yep. Perfect. Now, the taxable income for all the 3 years is zero, right? For all the 3 financial years is zero as a check. So you can work your way through it then. Now I'll move on to the next question. Okay. 13.1. Have a read. And then this question is actually, I have divided this question into 2 slides. So have a read of the first slide, and then we'll move on to the second slide. Excuse me. Okay, let me know if you've read this, and then I will move on to the next slide just to show you the second part of the question. Okay. Kamal, you're good. Okay, so here's the rest of the information for 13.1. Have a read and let me know when you're ready. Perfect. Thank you for confirming. So we are required to calculate TED's taxable income and tax payable for the year 2017 and 18. In this question, you're required to take into account a number of things. So whatever you have learned about deductions, assessable income, any allowances you can take, any low income tax offset, Medicare levy, all those things will be taken into account. A very good approach, a better approach in addressing this question as is in the template is first to write down all the assessable income, right? All the assessable income. You should be able to take the gross wages, allowances, any other income that TED has been able to make and write all those things here as assessable income. Now, we're not discussing the answers here, but just remember anything that TED has been able to earn as part of gross wages, allowances, or any other income that should be taken into account as assessable income. Then the next part in that spreadsheet will be to write down any deductions. So write all the deductions that you can see. Here, go back to one of the prior chapters where we worked on how much you can take on uniform, anything which is personal that is not allowed, any private expense which is not allowed. And you did an assessment question in, I think, in assessment 3. Any tax agent's fee, if that's allowable, any donation that is allowable, any self-education expense, any car expense. If it is car expense, then apply the information that we learned about out of the 2 rules. Which one are you going to apply? And for parking, for superannuation. So apply those things and see which ones are eligible, and then write the amounts there, and then minus the total of the deductions from the assessable income, and you will get that as your taxable income, So that's that you need to work on. As a check, I'll give you the figure, right? I'll give you the figure. Taxable income in this instance will be total 55,713. That's the taxable income, right? That's your check. So you can work out your way through deductions and assessable income. That should be your taxable income. Based on the taxable income, calculate the tax, which you have been doing in many questions. By now you would know how to calculate the tax. See if TED is eligible for any low income tax offset. Check any Medicare levy that would be applicable and any pay-as-you-go tax that has been withheld. And that should give you the tax payable or tax refundable figure. And I will leave that figure for now for you to work out what that tax payable or refundable will be. Just a hint, this question will give you a tax refundable. So you should be able to get a tax refundable figure as your answer. So everyone's okay with this? Of course, you'll have to do your calculations to arrive at that, but hopefully the explanation is okay. Okay. Perfect. Thank you for confirming that. Now I will move on to 13.7. Okay. I've again divided this question into two slides. Yes, 3 slides actually. So have a read of the first slide with the question 13.7, and then I will show you the second part of the question. Okay, Jason has read it. Hopefully Ayami and Kamal. Very good. So here's the second part of the question. All right. So, first thing you need to calculate is the net rental income for 2017-18 financial year. To do so, first thing you will need to see is how much is the rental income, right? How much is the rent received? Now, don't be deceived with this information of proceeds of mortgage from bank 15-year loan. What this means is this is not income. This is what you would have received from bank when you purchase the property to make a payment to the seller. So this must be a capitalized, this must be the capital, which is not accessible because this is not an income, right? So please do not account for this as your rental income. So accessible income through rent, fairly straightforward. You have one account, you have one amount. Now you need to work out what are the deductions you can take against the rent, right? What are the deductions out of all these payments that you can take against the rent that has been received? So there are a range of things. For example, stamp duty on property. Have a look. Stamp duty, is it actually capital or is it an expense? Is it a capital expense which is not non-allowable, or is it an expense that you can take against the rent? If not, then don't apply it. Look for agent's commission, any legal costs, building capital works, right? Building capital works. What about, as I can see, you are typing that capital. What do you mean by capital, Kamal? Sorry about it. Can you please clarify? Just waiting for your thing to come up, and then I will address it. That's correct, Kamal. Stamp duty. So that's not an income. That's not an expense. So yep, you're correct. Won't be able to take it. That's correct. So you will have to work your way around it. Now, in this question, notice you have been given this building was constructed in 93 at a cost of $60,000. So any percentage of capital works on the building that you may be able to apply. What about the borrowing costs? And have a look at the painting. It was purchased on 1st of August 2017. So make sure you are working the percentage and for the number of months that you held it for. Carpets installed on this date, effective 5-year life. So you may have to calculate the decline in value for the carpets. So go back and check those exercises that we did in the prior weeks, and whatever expenses you can take. As a final answer, right, when you work through it, I can tell you, let me just see if I've got the spreadsheet here. Okay. Your net, I know this might not be a very clear spreadsheet. It was actually too big to fit into this this slide. But your net rental income after all the expenses as a check as a check should be 4,029. 4,029. After you have applied all the deductions, that's what your net rental income will be. So you will have to work your way around all the deductions. Once that is done, the second part of the question is to calculate the taxable income, right? Taxable income. So that means you will need to take into account what Trish has earned as part of gross salary, any other income, right? Any other income that she might have received, and the rental income that I've just given you that total dollar value for, right? This net rental income. So add them all up and take away any deductions that you can apply to her assessable income. Any deductions you can apply to her assessable income. Jason, I'm pretty sure you let me know where you're going with your deductions, right? Figure 4,029 is correct. Work your way around it and you should be fine. But then coming back to what I was saying, when you're calculating the assessable income, apply these deductions, right? Make sure you apply only the deductions that Trish can take. And that should give the taxable income for Trish. As a check, taxable income for Trish can be, I'll give you the figure. Taxable income is 70,669. That is Trish's taxable income. Then next part of the question is to calculate the tax payable. So I'm sure you will be able to calculate the tax on that taxable income. Make sure to apply anything that you need to, whether it's Medicare levy, just check if Trish is eligible for tax offset or not, any pay as you go withheld, and you should be able to get the tax payable or refundable. I won't give you this figure, so you work your way around it. Okay, any questions? The only tricky part here is to work your way through deductions. Give it a go and see if you arrive at this figure. Do not panic if you don't, right? Do not panic if you don't arrive at this 4,029 after calculating all the deductions. So give it a go. And of course, you have a second attempt, so you won't lose anything, but give it a go. All right. Now, before I go, just a reminder, your next unit will be released on 1st of April. 1st of April. There are no live sessions because I'm traveling. What I will do is I will pre-record these sessions and I will make the recordings available. I will try and incorporate as much as practice questions I can. But remember, I'm available through email. So at any time, if you do have any questions, please do not hesitate to email me. I might not be quick in responding to my emails, but I will get back to you. And I will be back on 8th of May, right? Hence, I will have a live session on our week starting 13th of May. That means the next live session will be on 14th of May. I will send an email as a reminder to everyone. But yes, because I'm traveling, I won't be able to have these live sessions on Tuesdays for the next 6 weeks. My apologies, but I'm looking forward to this holiday. All right, any questions? Now, don't forget, question 13.7 has an extra question to it. That means you're required to fill a template, as a form that has already been provided to you, to fill in Trish's income tax return. So please don't forget to do that and submit it with your assessment documents. All the information that you will need to fill in that document is here in the spreadsheet. Okay. It doesn't have the health fund information, the question. Okay, let's have a look at the question. Good point, Jason, good point. There we go. Trish was covered by adequate private health insurance. Ah, okay. So Jason is asking, when you fill in the tax form, it asks for the health fund info. Okay. All right. Just make one up. I will say that's right, Kamal. Just make one up, because the question says Trish was covered. So just make one up, and I will accept that. And I should have provided the other health information, but that's okay. Just make one up. That will be fine. Good point. All right. Well, I'll let you all go, and we'll see you back when I'm back. Thank you very much. Thank you. Stop the recording now. Thanks a lot.